It's perfectly possible that even after reading the solution to this question, you still find it quite challenging. And I think it's fair to say that it is. This is a tough question. Business valuation questions are often difficult because it takes a while to figure out how you're going to approach them. Whereas in other bits of the syllabus, like currency hedging or investment appraisal, you've got more of a sense of direction. And thinking takes time, and obviously in the exam you've only got a limited amount of time. So yes, it is a hard question, absolutely. But you only have to score 50%, and scoring 50% is perfectly manageable here with good exam technique, and that's going to be what we concentrate on in the debrief. So after reading the first exhibit, the first thing that I would be doing here is going into the requirements and copying them into an answer plan. And then I would do a little bit of editing and arrange my time management and make sure that I understand all of the aspects of the question. So I would multiply the technical mark allocation by 1.95 minutes per mark to plan my time, and I would allocate 20% of the available time to the process of planning, so about 10 minutes. I would have a sense fairly early on that this is a tough question, and when you're in that situation, you've got to make sure that you target the discussion areas to score well. So this becomes even more important than it normally would be. So I've got to make sure that I understand what the discussion question is asking. First of all, you've got the verb discuss. That implies that we can be a little bit critical. So we can talk about possible sources of synergy in a slightly skeptical way. And of course, we'll pick up professional marks for doing that too. I've got to make sure that I'm talking about financial synergy. So this is to do with better utilization of cash flows, or tax issues, utilizing tax losses, or reducing the cost of capital. So those are the areas I'm going to talk about. I'm not talking about operational synergy or sales synergy. I will make sure that I comment, however briefly, on the concern that synergy is often overestimated. And that can't just be, I agree or I disagree. I'm going to have something to say there. And I will try and think of something that will help me to address that problem of synergy being overestimated. So I've got to try and answer the whole range of the question accurately. And the markers are generous if you do that, and you can realistically look to score most of the marks in Part A. So in terms of technique, I think that's the key point. Briefly looking at the points you could make here in this question, the financial synergy, well, the cash flow, we're told, is specifically relevant, that Danton has had funding constraints and utilising Kerrin's extra cash would help to address that. Tax losses would be more quickly utilised by the acquisition, although Danton is now profitable, so could do that, but not as quickly. The cost of capital is more debatable. Would it go down? Well, again, from Danton's point of view, possibly as part of a bigger group, it's going to be seen as being less risky, more stable, more diversified. Risk might be seen to reduce, and therefore cost of capital could reduce. So lots of points you can make here in a thought-provoking way without writing at great length. Synergy is often overestimated, yes, because managers might want acquisitions to happen and advisors might want it to happen too. What could you do about that? Well, potentially don't pay advisors a bonus for acquisitions actually happening. If you just pay them for their work, they'll be less likely to exaggerate. And perhaps allocating responsibility specifically for making sure that synergies happen to a senior manager could help to address the problem. Lots of very practical things that you could say, and lots of other points besides. Lots of scope for scoring marks in Part A. And if you can discipline yourself to do that, Part B becomes much less of a problem. Clearly, you don't have to score as many marks. So to get an overall pass mark in the technical bit of the question, if you've got 6 marks in Part A, you only need 4 marks in Part B. And although you're not going to be going for for that level of marks. It's reassuring to know that you don't have to ace Part B now. Part B is tough, but key point with Part B is that there are easy parts to it. And if you can show the marker a chain of logic to score the easy parts, then even if you can't quite complete the assignment to come up with a share for share offer and calculate the impact of it, actually you can still score pass marks and more in Part B. And we'll demonstrate that by going through some of the numbers. But before we do, the other thing I do want to emphasize is that most of your work needs to be in the word processor here, because the word processor is the way that you communicate with the marker. The spreadsheet's difficult to write in, so it's there for the calculations, but the meaning of the calculations and your logic has to be explained in the word processor. So all the way through you're going to be focusing on the word processor and saying, okay, well, the first thing that I'm going to do is this, and a reference into your workings in the spreadsheet document. Right, let's have a look at some of the calculations in Part B. So the first thing I'm going to explain in my Word document is that to start this analysis I need to value Danton now. And that's going to be my first set of calculations. It's the calculations we're looking at here. Danton's valued by using Kerrin's PE ratio inflated by 20%. So I'm going to work out the PE ratio. I'm given the share price, and I'm given the earnings figure, although I have to be slightly careful because the earnings figure is before tax. So as I've highlighted here, I have to take off 20% tax. Okay, so that's going to be 381.9, the figure given in the question, times 1 minus the tax rate. Tax rate is 20%. So that's my earnings figure. The number of shares, well, I'm told that Kerrin has $375 million worth of shares, but these are 50-cent shares. Then I can work out my EPS. And now I can work out my price to earnings ratio for Kerrin now, which I'm then going to inflate by 20% for valuing Danton. And then I can take Danton's earnings figure, given in the question as 116.3, and I think I need to put in the synergies that were told about in the question of 2.5 million. And I'm going to take that after tax. Multiplying the earnings to the PE ratio gives me a value for Danton now. And we're told in the question to inflate that by 30%, so that's the 1921.7. That's my target value for Danton, and that's what I have to achieve with the paper bid. Now, even if I don't know how to do the paper bid, I'm going to get credit for those calculations and for the logic that's being explained in the word processing document. The next thing I would explain in my word processing document is that in order to come up with a paper bid, I need to understand what the shares are going to be worth post-acquisition. And to value the company post-acquisition, I'm told that I can use the PE ratio of Kerrin inflated by 10%, which is what I've got here. So that's taking cell D13, which I've got here. That's Kerrin's PE ratio inflated by 10%. So that's what I'm going to use. So logically I have to apply this to the earnings of the combined entity. I've already worked out the post-tax earnings of Kerrin and Danton. So what I've got to do now is throw in the synergy, which I'm told in the question is 15.2 million and financial synergies of 5.3. So 15.2 plus 5.3, and again those are before tax, so I'm going to multiply by 0.8. Then I can add these up. So these are the total earnings of the company post-acquisition. Multiplied by the PE ratio, I get the value. Now that's something that you ought to be able to complete, to be able to complete in the exam by the time that you're ready to take the real exam, because that's a fairly standard post-acquisition value of a company. And even if you don't know where to go from there, you'll get credit for everything that you've done, and you can at least show the impact of the cash bid given in the question on shareholder wealth. But if you can't go beyond this, it's not a disaster. Don't sweat it. You don't have to get these questions 100% correct numerically. But if we think about this, if that's the value of the group, and we've said at the top of the screen that Danton needs 1921.7, then that means that 1921.7 is about a third of the value that we've calculated. So the 32.3 is the 1921 divided by the 5944. And that means that Danton are going to need 32.3% of the shares. That's it. And once that clicks, if it clicks, then you can say, right, well, Kerrin's got 750 of the shares, and that's got to be 67.7%, which is 100 less the 32.3. If 750 is 67.7% of the shares, then the total number of shares will be 750 divided by 67.7%. So 1108. And that means the difference, the balance, 358, is what you have to issue to Danton. And you're going to be doing that for their current number of shares, which we're told in the question is 35 million in dollar terms, but they're 25 cents, so it's 140 million shares. And so that is going to be about 2.56 shares in Kerrin for every share in Danton, and that's going to achieve what Danton are looking for. So that might be an interesting learning point for future questions on this sort of theme. But the main point is that you do not have to get that complete answer to score a pass mark. You just have to have a chain of logic and to have done some of the calculations and to have tried to answer the whole question. And there is another bit of the question, isn't there? The second bit of Part B is to calculate the effect of the cash and the share-for-share offers on the post-acquisition wealth of both sets of shareholders. You might not have time to do both the cash and the share-for-share offers, but even if you were stuck earlier, you can do the cash offer and pick up some marks there, and every mark counts. So we've already calculated the value of Kerrin and Danton before the takeover. After the takeover, Danton's shareholders will have 13.1 of cash, and as we've said earlier, they've got $35 million of shares and they're 25-cent shares. So we can say what's happened to their wealth, so a big change in their wealth. And then we can say what's happened to Kerrin's, because we know that the revised value of the group, which we calculated earlier, is this 5945. And if they've paid 1834 of cash, then what's left for Kerrin is 4111. And comparing that to the 3960, that's a small increase of about 4%. So those calculations are quite accessible. For the paper bid, the calculation of the effect on wealth is fine if you've got a paper bid, and you'll get credit for any reasonable approach to the paper bid, I'm sure, but if you were stuck, you won't get those marks, and that's life. But if you have got it, then it's the same approach as the cash bid. You work out what you've paid for Danton in paper, you pick up what remains to Kerrin with the paper bid, and you look at the change, and the picture is broadly similar. And that basically completes our analysis. For the professional marks, your analysis and evaluation marks will mainly be drawn from how you've approached Part B, what your logic is and how you've used the numbers. And I think you've got more opportunity for being practical and sceptical in your answer to Part A. And you can pick up the points that are made that cover the detail of the technical and the professional content in the written solution.